Welcome to AHA Math and Science. In today's video, we're going to talk about the yield curve. Specifically, we're going to talk about the spread between the 10-year treasury and the 2-year treasury note. And then discuss whether it's this yield curve is a good indicator of a recession. These past few days, the headline news is all about the failure of Silicon Valley Bank and then the associated volatility in the markets. Where that volatility is not just in the stock market, it's also reflected in the bond market. And actually, the headline news of March 13 reads that the biggest plunge in bond yields since Volcker era on bank fears. So the 2-year treasury note, its yield was above 5% last week, and then it drops below 4% in a matter of 3 days. That's quite actually unusual, and it really kind of goes back to the early 80s, and you see this kind of volatility in the bond market. So what is the 10-year and the 2-year yield spread? It is basically the difference between the yield of the 10-year treasury and then the 2-year treasury note. So normally, that yield spread is positive, but before the recession, the yield curve starts to become inverted. So let's take a look at this curve, this chart for the 10-year and the 2-year yield spread versus time for the past 4 decades also. You can see that this is the zero line, which is anything above it is kind of the normal times when the yield spread is positive. And then prior to a recession, this shaded area is a recession. The yield curve starts to turn inverted. When the spread becomes negative below the zero line, that's basically inverted. So now the 10-year actually has a smaller yield than the 2-year treasury, and which is kind of unusual. And you can see that prior to a recession, it become inverted, and then about like couple months, maybe several months, sometimes until a year prior to the recession actually starts, and that curve starts to become positive, start to kind of turn to the positive territory. So this is kind of like you can call it a de-inverting is happening. So you can see this is true for every recession. So the yield curve gets inverted and then becomes de-inverted a few months, maybe up to a year before the recession actually starts. And that happened for the 1990 recession, for the 2000 recession, and then you can see for the 2008 recession, inverted, and then becomes kind of de-inverts, and then turns to the positive territory, and then recession actually follows. Even true, just for the 2020 recession, though, that the inverting is really kind of brief, just like for a moment, and then turns positive. And then now the 1981 is actually very interesting because there are 2 recessions here. One is in 1980 and another one is 1982. And then still you have the de-inverting, and then the yield spread becomes positive, and that's when the recession actually starts. So inverted, then de-inverting, and the spread becomes positive and recession. But the 1980 is very interesting because prior to the actual recession, you can see that the 2 attempted a de-inverting. In other words, the curve started to kind of turn around, and then the yield spread started to kind of shrink, becomes less inverted, but did not really break into the positive territory. It actually did twice. Before the third time, the de-inverting starts, and then it actually breaks into the positive territory. So before that, actually, you have 2 sort of attempted de-inverting, and then that's like a few months before the recession. So in any case, even though that the de-inverting starts and it did not break in the positive territory, it's already kind of suggesting a recession is not that far away. But if it does break into the positive territory, the recession is almost imminent, and that happens for every case. So what about now? You can see that just yesterday, you can see the de-inverting kind of start to become very clear. But we don't know that if actually the spread is going to turn into positive or not. We can only kind of wait to see. But even that, that this is just attempt de-inverting, it's alert. So since actually this inverting, the level inverting is almost like 100 basis points, which exceeds any of this recession, any of these 4 recession, except you have to go back to the 1980. You see this kind of level of inverting. So go to like 100 basis points. Now it's like 100 basis points. And also this kind of like a sudden volatility, the plunge in the yield, bond yields is kind of compared to the Volcker era. So we really need to kind of take a close look actually at the spread curve in the late 70s and 1980s, and maybe give us some kind of indication what happens this time. So this is the present time. So you can see like since like mid of 2021, the yield curve already, the yield spread already kind of peaked, and then it's all in a very clear downtrend. And you can see right here, the yield curve becomes briefly inverted and then become very inverted, kind of like since middle of 2022. So we can draw this trend line very clearly in this downward trend for the yield spread. And just yesterday, actually, the curve breaks above this kind of trend line. So now it's very clear that we kind of already in this so-called de-inverting sort of a new territory. But whether this is actually going to causing the yield spread become positive, or it's just like just a temporary thing and it's not going to break down again, that's basically what we need to watch for. But we can basically, this is an indication. We can just kind of say that the yield spread breaks the downtrend on March 13, 2023. So this is the present time. So what about the 1980 recession? Prior to the 1980 recession, this is our yield spread. The difference between the 10-year treasury yield and the 2-year treasury yield. You can see that the downward trend. So we again draw the trend line like this, and very clear that right around here, middle of 1978, the yield curve becomes inverted. So what happens here? This is when actually there's an attempt de-inverting. It did not break into the positive territory, but definitely break the trend line. So this is an important sort of moment. We take a note of that. And then it did it, and then it started to go down again. It did not break to the positive territory, and then it started to go down again. The second time it did attempt de-inverting is almost the end of 1979, December of 1979. And then the third time, actually a recession, it's already in a recession. So for this cycle, the recession started in January of 1980. So this one is already kind of imminent. This one is about like 5-6 months earlier than the actual recession starts. So even though that it did not break into positive territory, it's still an alert that worth paying attention. So we noted that the 10-year and 2-year yield spread first breaks the downtrend in May 1979, and then the actual recession started in January 1980. So this is a predict, basically, even it's attempted de-inverting and did not break into the positive territory, still it's a signal worth actually pay attention. So so what about now? So if this is what we are watching, whether it will break into the positive territory or not. If it does, that probably says like a recession is imminent. But if it does not, and it starts to resume the downtrend, this is still a signal worth watching, because based on the 1980 sort of history, we know that's an indicator. The recession is not too far away. So if history is any kind of guide, even this is kind of like a attempt, a de-inverting, this still could tell us that the recession will be coming in like several months, maybe like half a year. So it's very likely that in either case, we probably will have a recession. If this just kind of shoots up, go all the way to positive territory, then recession is kind of imminent. If it breaks down again, then we are talking about recession maybe in like 5, 6, 7 months-ish. So it will be still sometime this year. So I hope you have enjoyed this video and find the information presented here interesting. Please do not forget to click the like button. Your support really means a lot so that I can make more videos like this one. And also please do not forget to subscribe to our channel. And thank you for watching.